Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. LME 3-month copper. I have said here the same thing now for many months. There are 3 important congestion zones, which in turn have become either important support zones or resistance areas. We are today in amongst the highest and possibly the toughest of these congestion zones, between 97.50 to 99.95, just exiting actually possibly it. Though last week and the week before we have managed to briefly stay above it, only to each time get slapped down. Below we have the next zone, which is the 93.95 to 96.05 area, and finally a smaller area well below the current market between 91.38 to 92.16. Now this last one saw the market push up through it 7 weeks ago, then get capped by the next congestion zone, the 93.95 to 96.06 area overhead, plus at the time the declining short medium moving average, currently 92.99, and we ended up back down below it again, before 3 weeks ago tackling it yet again, and 2 weeks ago pushing up through it. Prices then traversed the free area up to the 97.50 to 99.95 area, where we've been for nearly 2 weeks now. This week prices started where they left off last week, within the 97.50 to 99.95 congestion area, but today have managed to push down through it, if possibly temporarily and briefly, I don't know yet, it's only been 1 day. We've also moved down below the dark blue middle time, currently 98.75 of the breach but seemingly repaired early August to early September bullish Andrews Pitchell, which I drew 3 weeks ago. I said about this pattern 3 weeks ago, and I quote, "I am not in love with this pattern, even if it is the first bullish pattern of note I've drawn for quite a while. I'm quite prepared to finesse this into a shallower bullish shift pitch or even retire it completely, but for now it is doing its job of showing the nascent bullish angle of attack higher." End of quote. Today it is still doing its job. LME 3-month aluminium. There is still a lot going on here in this daily chart. The move higher over March, April, May, and I suppose even the most recent one from early August originates back to late February, with the market breaking higher from a diamond pattern type formed back then between late October 2023 to late February 2024. Now please remember this as if is the congestion generated by this diamond pattern on the wide between 2100 to 2400, but really between 2156 to 2297, that caused the very recent rise since late July, though obviously not the original pattern itself. Okay, so the decline from late May to July was stopped by the extension of the neckline, currently at 22.19, of the June to July 2023 reverse head and shoulders neckline pattern. From this base, prices started building and experimenting upwards. And it was interesting to see a move higher from the same price zone as the earlier diamond bottom pattern, roughly 2400 down to 2100. In the process, over early to middle August, the market constructed a small ascending triangle pattern, reached the primary and secondary targets on the upside and pushed up through some significant resistances now turned supports. The nearby notable ones were and are the congestion zone from mid-June to mid-July between roughly 24.85 to 25.63, containing the key levels at 24.85, 25.08 and 25.63, plus the bright red middle time currently at 25.51 of the mid-December 2023 to late July this year shallowly rising bullish shift pitchell. I also drew 3 weeks ago a shallow bullish shift pitchell for the late July to early September move, and that's in bright green. And I said at the time, and I quote, "This last one I'm happy to finesse or even retire as the market demands." Well, the market demanded that I finesse this to and that's the end of the quote, and the market demanded that I finesse this to a more acute bullish Andrews pitchell, which as I highlighted in bright green on my daily chart. As you can see, prices have recently until this week been fondling the middle time, currently at 26.89, though today we are now closer to the lower time, which is currently at 25.31. Now, 3 weeks ago I said the following about the topside resistances, and I quote, "A somewhat dubious congestion band between 26.66 to 26.80 that right now contains the purple middle time, currently at 27.11, for the bullish Andrews pitchfork with the same move as the bright red bullish shift pitchfork. I should point out that the purple bullish Andrews pitchfork has so far been studiously untested. End of quote. Well, the purple middle tine has moved higher, still untested, and the overhead congestion band is still there between 2666 to 2680, now seemingly rejected. I said as much last week, and I quote, "All this is making me think that just perhaps the market could do with a bit of a rest right now before any fresh attempt higher. I have nothing behind this other than a fear of an overextended market not being able to generate energy for any further attempts higher." End of quote. Well, my fear of an overextended market has been borne true, as we have dropped today all the way down to the December 2021 low at 2581 and close to the bright red middle tine. Just below that 2581, we're actually down to the next congestion, which is at 2563. All this activity has left behind a September to date ascending wedge pattern, highlighted in dark blue on my daily chart. Now I know it is only one session, but the size of the move lower should be sufficient enough for me to plot potentials lower. Thus, a primary target would be in the 2585 zone, a zone which prices have already reached today, with a secondary harder to reach target in the 2455 zone. In attempting these, the market would not only have to push down through some significant congestion, but also the bright green lower tine, the flatlining medium moving average currently at 2481, and challenge the significant 50% Fibonacci line of the December to May 2024 move at 2454. Now that last one will be an interesting contest to watch. LME 3-month lead. There are a number of significant features on this daily chart. The first I'd like to mention is the immediate overhead wide band of congestion originating from April between roughly 2135 to 2186, a congestion area that showed itself at the peak 6 weeks ago, and again over the last 2 weeks, and then this week. This area contains the 50% Fibonacci line of the March 2020 to March 22 move at 2135, the nearby gold long moving average currently 2124, and edging down the mauve declining medium moving average currently 2135. The next is the late July to late August reverse head and shoulders pattern. It is far from a pretty one, and I am loath to even mention it, but it does exist. And that rise peaking 5 weeks ago was all it could achieve, but it did lead to another pattern which I'll discuss shortly. We also had well below, Fibonacci based congestion otherwise between 1994 to 2002, followed by the June 2023 low at 1976, which looked, how shall I put it, less interesting, and then the 2024 low in August at 1917, which I suspect is a function of the nearby 2021 low at 1908. This is also a neckline extension. There is also a neckline extension currently at 1946 of the July 23 to February 2024 head and shoulders continuation pattern. The reason I mention these supports below is that they contributed to eroding the decline we saw in early to mid-September, enough that it was stopped and turned back upwards and brought about 1, possibly 2 bullish patterns. We have the bright red early August, early September bullish Andrews pitchfork. Despite today's drop, prices are still at this time in between the middle tine above, currently at 2197, and the lower tine below, currently at 2076, so obviously closer to the lower tine. The second pattern, and here's where I'll quote from last week's commentary when I said, is almost ready though not yet triggered, a mid-July to date double bottom. This has a neckline in the 2135 to 2140 area, and as I previously stated, has not been triggered. But that doesn't stop me from laying out some potentials topside should it happen to be so before next time. Thus, a primary potential, not a target yet, but a potential would be in the 2273 area, with a secondary harder to reach potential up in the 2324 area. All it would need to kill these two would be the market to just go sideways, to open up the possibility of a shallower bearish shift pitchfork and even a triple bottom. So just watch carefully. End of quote. Well, as you can see, we have not gone sideways, but instead actively headed lower, and so this pattern will now be put on hold. This just leaves the one new pattern that has been set up this week, and is a weekly key reversal up. Just a weekly key reversal up, I won't say up yet. Thus, if we close this week either over 2150 or under 2111, there will be on. Right now, we are looking very much at a weekly key reversal down. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.